So who's enjoying Operation Make Retail Poorer? It's working flawlessly from what I can see. And this is always the way. What I want to talk about is, based on my last video, which you should subscribe to the channel and watch because it was a 20-minute thought process on what I think is about to happen, and why some of these things that are already happening, like Bitcoin crashing, like AI going through the roof, like SpaceX IPO falling apart, like why these things are happening. So make sure you go and subscribe to the channel first and then watch that video. One of the things I notice is that when I make longer videos, less people watch them. And it makes sense because most people are basically brain dead. So the people that choose to watch it, I've now come to the conclusion, if you've watched any of my content recently, you'll know that I have personally, in my heart and soul, come to the conclusion that I'm basically making content for like 0.5% to 1% of you. That's it. Right? Everyone else, that kind of remotivated me to start making content again, because I kind of realized, like, that's just the way of the world. The world just works like that. It's unfortunate or fortunate, whichever way you want to look at it. But most people will just end up screwing themselves, no matter how much. And by the way, I can say all of this because I'm not sponsored by anyone and I'm not controlled by anyone and I don't have anyone tugging at my ponytail, let's say, right? Firstly, I don't have any hair. So there's that. But basically, that's what's going on here. And Operation, Make You Poorer is happening. And I want to now pivot slightly while you're depressed and crying about Bitcoin, because that's what you're probably doing right now, unless you're in the 0.5% to 1% who realize the difference between value and price. And you understand that if something has value and the value stays constant and the price goes down, it's actually a better time to buy. But we're going to ignore that, right? And I'm just gonna basically focus on the people that are, just assume that you're all crying. So I want to talk about here my case for a crash, a stock market, equity market, broad market crash, the crash that everyone's talking about happening in 2027. And I really want to talk about what I'm doing to kind of get prepared for that, right? So, you know, like I said in my last video, narrative drives liquidity until liquidity forces a change in the narrative, right? And so right now, I want you to understand that markets are forward looking. Markets price things based on what people want to pay for them in 6 months, in 12 months, in 2 years, in 3 years, in 5 years, etc., etc. And these AI IPOs and these robots and space IPOs have basically been priced at 122 times earnings, right? So the forward earnings that we are willing to pay, for this company is ridiculous, right? It's never been seen before in market valuations. So we have basically forward priced this thing in such a way that it's going to take 10 years, 15 years at current growth rates. Now, what might happen, and a reason why you get all these forward valuations so high, is because people say, yes, but the compounded growth at which it's going means that forward earnings are going to be dragged forward. So, therefore, it justifies 122 times because, it might not take 15 or 20 years because of, the way that it's growing. It might only take 5 6 years to justify those earnings. So that's one reason why we end up paying these crazy numbers, right? But really, a market function, and if you think about how liquidity kind of flows and whatever else, it's like it 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 values something at a forward multiple in a forward looking way until the value gets insane, and then basically smart money moves to protect value while everyone else gets basically punched in the nuts, right? That's simply how the market works, and your job is to catch a couple of these, right? If you catch a couple of these in your life without the getting punched in the nuts part, then really you're set forever, right? This is it. There's nothing else intelligent to do when it comes to investing or anything like that. It's basically you catch real estate and then you catch tech. Done forever. You're set forever. You don't need to worry about a single thing ever again, right? And then at that point, you just do what I do, which is figure out what you enjoy doing and do that, right? It's simple, right? For me, just happens to be that I actually love is as much as my this character for entertaining goes, I love the actual education part of breaking down what I'm learning in markets, and then having people kind of helping someone try and see things in the way that I see it, and maybe it's the right way to look at it, right? Like, I really enjoy that process because it kind of forces me to think about things um as well. So that's good. So now, really, there's three reasons why I think there's a major crash coming in 2027. And I think that all of these things are going to be super important for you to pay attention to. And the first thing is that these AI earnings have been so overblown, and the forward multiple that we're paying for these IPOs and these companies is just ridiculous, right? Like, we've seen what's happened to SpaceX in the last 24 hours, and this is before all of these unlocks happen, right? Like, I wouldn't be mad at myself if because I do want to make an allocation to some of these robots and AI driven stuff. But am I going to be doing it at 122 times multiple at a market cap of, $2.5 trillion, which is kind of where it got to? No, I'm not going to be doing that because I'm not a fucking idiot, right? Like, I had people telling me, like, okay, yeah, SpaceX is going to go to $100 trillion. The entire US stock market is about 70. Like, what are we talking about here? So, maybe like a 250 to a $500 billion valuation might start adding something, right? And so that's the other thing I want to talk about here is that, look, I am British HODL, and yeah, it's about Bitcoin, but hodling is really about any major macro trend. And I think that there's three macro trends. Again, this is why I think you should subscribe to the channel, because we're going to discuss all of these. The macro trends for the next 20 years is very simple. There's Bitcoin, right? That's number one, because it's actual finite scarcity. Then there's AI and robotics, and that becomes a little bit more complicated. Um, that's going to create so much value that it's hard to ignore that. You can't ignore that. It's also one that really directly impacts. See, the Bitcoiners got this wrong. The Bitcoiners, by the way, my ex is going crazy because Bitcoiners are being, childish again as usual. So make sure you go check that out. It's hilarious. But the thing that Bitcoiners got wrong is that they thought Bitcoin would be adopted like AI, right? And that's not going to work like that, because Bitcoin is very relevant to money, to dollars, right? And so one person with $1 billion is more relevant to Bitcoin than someone with, $1,000 in Bitcoin, right? Whereas AI is different, because AI is actually relevant to the person who wants to earn something, who wants to make an income. So AI is more directly societally relevant than Bitcoin is going to be for the next stage of adoption that it's going to go through, which is store of value. So there's that. So that's the second trend, is AI and robotics, and the third trend is biotech, right? That's going to be hugely important, and I kind of want to open up talking about these things because they all require hodl. They all require the ability to, you know, sit there through insane volatility, because they're all going through their own independent S curves, right? It's the same kind of process as Bitcoin's going through. Bitcoin's the most finite. The others have all their competitors and stuff, but I think it's worth talking about them. So, firstly, these AI earnings are overblown. And of course, like I said earlier in the video, as earnings get overblown, valuations get overblown, the way retail gets punched in the nuts is because smart money decides to protect its value, right? And so we're, I think, going to see a coinciding, as we've seen, PMI numbers have started to expand. January of this year, was it? Anyway, sometime this year, went above 50 finally. So we've got overblown PMI numbers. I mean, sorry, overblown AI valuations, right? That's going to create a shit ton of perceived value, which needs to then be protected. The PMI, I think, is going to top, and that's gonna what that I think what's gonna cause the topping of the PMI is that there's just been overinvestment, there's been overzealousness, there's been over whatever, and I don't think we're gonna catch. I don't think we're gonna see the amount of orders, and we're gonna see the amount of revenue, and we're gonna see the amount of expected growth as it takes to justify the investment that's happened, and that's gonna cause a PMI top sometime end of Q4 this year, Q1 or Q2 next year, right? All of this is very vague in terms of timing. Like I'm never the guy, I'm never good at saying, okay, it's going to happen on this date. Like that's not me, right? I try to do that sometimes, but that doesn't happen. I always end up looking stupid. So the PMI is going to top at some point, and that's going to also cause a panic to the escape valve, right? Um, and then we've got a credit creation cycle that's going to be done, right? We've got a massive credit creation cycle going on right now, and that's going to be over with. And I think that's going to be over with at the same time as the PMI topping, at the same time as the realization that these AI numbers are kind of overblown. So, but that doesn't mean you could see AI numbers get overblown, people pivot, but the stock market still run, right? This is kind of what happened in 2021 when the PMI numbers topped out at the beginning of 2021, and then the stock market kept running. And the reason for that is because people start selling down those growth stocks, and they start buying the broad market. So you might see a broad market earnings expansion, which could take the market up. But that doesn't mean that you're not going to see, a fall apart in the valuation. So I think you're going to see a major stock market crash in 2027. And of course, I want to be hedged for that. I want to be prepared for that. In simple terms, what this kind of means is, look, we've expanded, we've created this future valuation, and everything's good, and we've over indexed. Now we've overdone it, and now we need a reality check. And in that reality check, we basically need to let reality catch up with the expansion or revalue the um the assets based on what the reality actually is, right? And I think that's going to cause a major crash in 2027 for the stock market. So what I'll be doing, and my plan for actually, I'll do that on another video. I'll do a detailed video on what I'll be doing, and how I'll be planning for this 2027 crash. So make sure you subscribe to the channel for that. But all of it is going to involve Bitcoin. I think it's very important. Remember, because Bitcoin is the store of value trade. So the question here is, if you're smart enough, is can you see how Bitcoin plays into this, and then the reflexivity that Bitcoin has compared to something like gold? Um, and so that's really, as a long-term investor, as a hodler, you've got to see where Bitcoin kind of plays into this. But make sure you go look at my X, because Bitcoiners are losing their minds, because I said I'm very bullish on Bitcoin at this point, but I'm extremely bearish on Bitcoiners. The people that are like, oh yeah, take your self custody. This is not, it's just a remote, but you take your self custody wallet, and this, that, and the other, run around, buy your coffees, buy your papusas, buy your whatevers with Bitcoin. Those guys are done. Those guys are cooked, mentally cooked, spiritually cooked, like hug a tree cooked, right? That's done. We're not going to go through that right now. We are going through Bitcoin being a store of value trade. Thank God for Larry Fink, Michael Saylor, Robert Mitchnick, BlackRock, MSTR. Thank God for all of those people, right? Because Bitcoiners don't have the ability to carry this forward. So there's that. Despite a coming crash, despite all of that, I do want to talk about how I'm going to be preparing for that. Um, but ultimately, there's always only three rules to Bitcoin. Step number one, you buy Bitcoin. Step number two, shut the fuck up. And step number three, you get fabulously wealthy.